of January. Let me just quickly repost to say that we are now live. Bear with me one moment, caller. And it's live. Let's see if Michael Brown's joined yet. Yes, he has. Morning, Tom. Morning, Steve. Morning, Mr. Brown. Oh, Tom's gone. Invite co-host. Oh, Tom's back again. Right, invite sent, I believe, Mr. Brown. Let's give it a second, see if it's worked.
Good morning, Ryan. Good morning, everyone.
Good morning. Just a quick one. Are you going to wait at the end of this Spaces session before I actually turn it off, before I hear you falling off your chair? Or
well, actually, I shan't be going anywhere because I'm working from home today. So I will
I thought you were going to say in bed.
God, no, that's where you are probably. Well, hang on. Whoa.
Whoa,
In your bed,
whoa.
not my bed. Let me clarify that.
Anyway, what? Couldn't risk going into London due to the wind?
Well, yeah, I did hear a rumour that there would be some flying dwarves blowing around, so I thought it best to steer clear.
No, not me. That's only in Whitstable. I mean, what? Anyway, apart from the weather, what's going on, my dear friend?
Well, you need your legals to cover me first.
Oh, yes, so I do. Nothing to sorry, it's a Friday. Nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by POQ Global Limited, trades POQ or POQ Suite, or its affiliates, which, as you know by now, is Mr. Michael Brown, way, Mr. Ryan Posey, way. Just in case anyone was wondering, that is me doing the sound effects as a crowd. There isn't actually a crowd next to me.
God. Right, shall we crack on?
Yeah, why not?
Yes, let's do that indeed. Right, good morning, everybody. Happy Friday, the end of another trading week and the end of course, Trump's first week in the White House. And in many ways, just looking back at the week as a whole, before I get on to what's happened over the last 24 hours or so, it has perhaps been a little bit more of a subdued week than many market participants were expecting. Certainly the rise in implied volatility that we saw in advance of Trump coming into the Oval Office has not necessarily been mirrored by a rise in realized volatility. In other words, markets have been quieter than expected. And actually, I saw a note from Bloomberg's Cameron Crise, one of their macro strategists. I'm just going to quote from that very briefly, who summed this up quite well yesterday in trying to explain why markets are seemingly a bit stuck at the moment. And he said that, and I quote here, "Nobody wants to be the person who puts on a position, goes to fetch a cup of coffee or grab lunch, and finds that Trump has posted something in the meantime that moves the market in an adverse direction." And I think he's absolutely right. Basically, he's
spot on. There's people. There's so many traders out there. Obviously, we know there's like a lot of fresh faces and whatnot. But genuinely, I traded the first time around, and genuinely, you would never be off your desk at certain times because you knew he was awake. As soon as he puts that first tweet out, you are not leaving your desk until you're done for the day, because now he's awake.
You're absolutely right, and I think markets are still very much adjusting to that level of uncertainty. In any case, we do see equities continuing to move higher, albeit in relatively modest fashion. The S&P adding just shy of 0.5% yesterday, notching a fresh record high. Treasuries finding some modest selling pressure at the long end of the curve, with 30-year yields rising by 5 basis points to 4.89%, although the front end of the curve was pretty much unchanged. And actually, we've seen some demand come into the 2-year this morning, testing 4.25% to the downside on a yield basis. It was also yesterday a relatively quiet day in the foreign exchange space, with the dollar continuing in range-bound fashion a few points either side of the 108 figure, although we have seen a little bit more life in G10FX overnight. The dollar index trading to 1-month lows below 107.5. That came after the BOJ decision, which I'll get on to momentarily. We also see a bit of life coming into the euro as well. Euro dollar testing 105 to the upside as I speak. And that is after what is frankly a miracle, in that we've had some German data that came in better than expected. Indeed, both the manufacturing and services PMI figures considerably beating expectations, which has put a bit of a bid into the euro this morning. In terms of yesterday, though, and some of the key stories over the last 24 hours or so, firstly, in terms of policy decisions, we heard from the Norges Bank yesterday, who kept rates steady at 4.5%. reiterated their prior guidance that the rate is likely to be cut for the first time in March. Overnight, of course, sticking with monetary policy, we have heard from the Bank of Japan. As had been widely expected, the BOJ delivering a 25 basis point rate hike, doubling the policy rate to 0.5%, which is, of course, the highest level since 2008. That was an 8-1 vote in favour of that decision, with Nakamura dissenting in favour of keeping rates steady. The guidance was very much in line with what we had heard previously, in that the BOJ will continue to raise rates if the economy continues to evolve in line with their forecasts and their expectations. And in terms of Governor Ueda's press conference, initially he struck a relatively hawkish note in referencing that the BOJ will indeed continue to raise rates and that the pace of those hikes depends on incoming data. But he did pour cold water on those hawkish expectations as the presser went on by stressing that policymakers have, and I quote here, no preconception on the pace of rate hikes going forwards, and that he doesn't think that the BOJ is behind the curve. The yen has been incredibly choppy this morning. The low comes in around 154.80. The high comes in around 155.70. As I speak, we sit slap bang in the middle of that range. In terms of other bits and bobs from yesterday, it was a very relatively busy data docket stateside. Of course, we had the weekly jobless claims data, initial claims at 223,000 in the week to the 18th of January, a modest uptick from the prior 217,000, although it is worth noting that that is only 3,000 higher than the December non-farm payroll survey week, which of course that print coincides with. Continuing claims, though, perhaps a little bit more cause for concern there. They rose to 1.899 million in the week to the 11th of January, which is the highest level since November of 2021. So perhaps implying that if folk are losing their jobs, it's taking them longer to find another job and to get back into employment, which is, of course, something that the Fed will be watching very, very closely if that were to become a trend. We're not going to see any overreaction to one data point. Other bits and bobs in terms of data yesterday, we also had retail sales out of Canada, which stagnated on a monthly basis in November, although I don't think that's too much cause for concern because StatsCan's flash estimate of December retail sales pointed to sales over the festive period rising by 1.6% on a month-on-month basis. So effectively, it looks like Canadian consumers pushed all their spending into December rather than in November. Away from data and in terms of a few headlines that we had yesterday, firstly in Europe, the EU, they want to push forwards AI, advanced research and clean technology in a bid to compete on a global stage. This is all part of the EU's competitiveness report, which effectively stems from the big review that Mario Draghi was doing into the shambles that is the European economy last year. The EU want to establish an advanced research project agency to try and come up with new technologies. They also want to build a whole host of new infrastructure to help support AI. Of course, with this being the EU, it's going to take about 1,000,001 summits before they actually put any shovels in the ground and build any of this stuff, by which point technology will probably have moved on anyway. Here in the UK, some pretty negative news on the labour market yesterday. We heard from Sainsbury's they're going to cut 3,000 jobs. They had previously, in their trading update a couple of weeks ago, estimated that the national insurance changes are going to cost the business an extra £140 million a year. And now they are cutting 3,000 jobs in order to be able to finance
Who
that.
saw this coming? Who saw
Well,
this?
we certainly
You
did.
know, I was promised by Rachel from accounts that this kind of thing wouldn't happen.
Indeed, and apparently the government have got a mission to go for growth, but destroying your labour market is not going to get you that economic growth. Just on that, actually, I put out a tweet earlier this week, just sort of summing up some of the costs that various UK companies, listed companies, had estimated that they are going to incur as a result of these changes. The response to that tweet has been quite remarkable, actually, and a number of various sort of small and medium enterprise owners have actually replied to that with similar examples of their businesses having to cut headcount or reduce the amount of wage increases that they're going to give this year. So it's not just the big names supermarkets that are struggling here.
Oh, no, not
It
at all.
is across the economy that this is going to be
Yeah.
felt.
For instance, it's impacted us. It's impacted PIQ. Rich Bernard, CFO to the stars, and me, who's listening in now. He, very nicely, very kindly in his eyes, actually wrote down how much more it was going to cost me a year while she was still talking and giving a budget out, which I didn't appreciate at the time. But no, it's significant for many, many companies.
Indeed, and it sounds like there's even less chance of me getting paid for doing this now. Anyway.
Start by paying myself.
Anyway, last but by no means least, a few bits and bobs on Trump, who was making some news yesterday. Of course, he spoke, well, he wasn't in Davos. He addressed the World Economic Forum in Davos remotely. He was urging OPEC to lower oil prices. He was also saying that he's going to demand lower interest rates and that he will speak to Jay Powell when the time is right. Of course, Powell is just going to tell him where to go on that one. Trump was also talking about trade, saying that he will do something about the trade deficit with the EU and that they can't continue with the current trade deficit levels with Canada. And none of this was particularly surprising, to be completely honest with you.
No.
Also, later in the day, Trump signed a whole bunch of executive orders, another one on AI. He also signed an executive action on crypto, which is apparently to form a working group. I mean, again, this is not my specialist subject, forming a working group to create a strategy to form, and I quote here, a national digital asset stockpile. Of course, time will tell what form that takes, but nonetheless, I'm sure all the crypto folk getting rather excited about that, and certainly we see a little bit of upside in things like Bitcoin this morning. And that is pretty much a lot from me this morning,
Well,
and for
thank
now
you.
anyway.
For now. Well, thank you very much, Mr. Michael Brown. Just briefly, just some shout outs and some admin housekeeping. Obviously, shout out to Zach, who puts out our overnight news roundup, which is up in the Jumbotron, whatever we call it, up at the top of the spaces. Give that a read, subscribe to that if you want to stay up to date with all the overnight news headlines. Shout out to Cam, who's also there listening, who puts out our Crypto Blast, which will be along very shortly. Also, shout out to pardon me, our friends at the CME have put up some of their most recent stuff, which always very handy, including their FedWatch page, which definitely check that out. Also, coincidentally, another mutual friend of ours, Mr. Dario Perkins, as coincidentally he's on at the moment because I've also put up a thing about CME Group's gold ETFs, gold futures versus ETFs. And as we all know by now, Dario Perkins once had a gold BMW. I'll leave you to pass judgment on that one. But
I thought you were going to say something about jigsaw puzzles instead then.
Oh no, or what the young lad down his road used to call him, which we can't go into because it's a family show. Anyway, but now I've done all that, let's get on to some overnight news headlines again, as I said, by our dear friend Zach. So in macro space, a China-led risk-on market move was seen after Trump said in a Fox News interview that he would rather not use tariffs against China, but called tariffs a tremendous power. Said he could make a deal with China over fair trade practices. The US Treasury said it's expanding its use of special accounting measures to avert breaching the federal debt limit, which kicked back in early this month. Now, when you start using that special accounting measures, it's you're on a rocky road when you start using terms like that. So yeah, one to keep an eye out for. Traders looking to sell the US dollar are far more common than previously thought, even as the dollar's dominance rips across markets. That's according to the latest from Morgan Stanley, who say many have dry powder and are waiting for a sign to enter shorts. An imminent PBOC triple R cut.
Actually, sorry, just on
Go
that.
on. Yeah.
I will go and read the note. I haven't read the Morgan Stanley note, but I think that just goes back to what we were saying right at the top of the show, whereby, a lot of people probably do want to sit and short the dollar or whatever position they want to take, but you can't do that right now because there's still the risk that Trump comes out today and goes 20% tariffs on everyone from midnight, and we're looking at a dollar at 110, not 107.
Exactly. It does feel like a bit like Mexican standoff time. Everyone's looking around going, well, who's going to be the first to enter But
Well, maybe
yeah,
not Mexican these days, but
well, maybe not, maybe not. So sorry, where was it? An imminent PBOC triple R cut is now deemed less likely, particularly after the bank pumped a record amount of short-term funds via the 14-day reverse repo ahead of the lunar holiday, alleviating any funding concerns. What we got here? LNG shipping costs are plummeting as market grapples with a glut of vessels, a development that could provide relief for gas importers, read the EU, and that's me adding up, by the way, and help pad profits for traders. What else we got? You mentioned some crypto stuff. So yeah, so the SEC staff repealed accounting guidance. The crypto industry has said previously has squashed the ability to work with banks. So potentially some opening up of channels there. But again, tune in or listen out for Cam's crypto blast that will coming along shortly. Geopolitical news: two Iranian ships docked in China have loaded with a critical ingredient to produce propellant for ballistic missiles, a demonstration of the challenge the Trump administration will have in pressing China to reduce its cooperation with Iran. That's from the Wall Street Journal. The Secretary of Russia's Security Council warned that the risk of an armed clash between nuclear powers is increasing. Russia accused NATO of escalating its activities on Russia and Belarus's eastern flank and conducting rehearsals for offensive operations there. That's gone to TAS, so bear in mind it's TAS, so pinch of salt. Pardon me, just a quick cough. Finally, some equity news. The Stargate project, obviously this is OpenAI, has not yet secured the funding it requires and will receive no government financing and will only serve OpenAI once completed. That's gone to the FT. Sticking with OpenAI, OpenAI's board is locked in complex negotiations to become a for-profit company, struggling to determine the price of Microsoft's stake in the startup while holding talks to value its newly formed charitable arm at 30 billion. Again, that's the FT. A couple from Tesla right now. So Tesla launched a new higher priced version of the Model Y, its best-selling car in the United States, Canada, and Europe on Thursday, weeks after it first released in China. On Teslas in China, Tesla will fix software for imported Model S and X and China-made Model Y and free cars over safety hazards, totaling more than 1.2 million cars. That's gone to the China's market regulator. There have been a load of headlines this morning from the Chinese car market regulator with lots of these over-air updates that need to be taking place, not just on Tesla, but on many other makes, including Chinese domestic cars. So just something to bear in mind to kind of balance the news out a little bit there. Boeing warned that it expected a fourth quarter loss of about 4 billion with a B, to close a year marred by production quality issues, stricter regulatory scrutiny, supply chain delays, and a crippling strike by US West Coast factory workers. And finally, UK darling that the government seems to be ignoring, Rolls-Royce will manufacture nuclear reactors to power UK submarines under a new contract valued at approximately £9 billion, which is about $9.37 billion. And that's it from me. Back to you in the studio.
good stuff. Thank you, Ryan. That Boeing thing's a
Thank
bit
you.
interesting, actually. They were due to report their earnings before the Open next Tuesday, but they seemed to decide that they would do it last night instead. So that caught everyone
Rip the bandage
off
off.
guard a little bit. Indeed. Right. In terms of today, then, of course, we've already had the Bank of Japan decision in the early hours of this morning. The rest of the day is really all about PMIs. We get the Eurozone flash PMIs for January in approximately 12 minutes time at the top of the hour. The manufacturing index expected at 45.4 from a prior 45.1. Services 51.5 from 51.6, and composite at 49.7 from a prior 49.6. Risks to those forecasts, though, are tilted firmly to the upside after stronger than expected figures from France and, of course, from Germany, which have already been released this morning. At 9:30, we also have flash PMIs due out of the UK. I won't run through all of the forecasts. We're expecting manufacturing to remain in contraction, services to expand at a modest pace, and the composite gauge to dip from 50.4 to 50.1. And then wrapping things up this afternoon, we have flash PMI figures out of the United States. Although, do bear in mind that this is the S&P PMI, which is one, for the US anyway, less reliable, and two, less widely watched than the ISM PMI prints that we will get in a couple of weeks' time. Away from the PMI surveys, what else is going on? Well, we also get the final read on consumer sentiment out of the University of Michigan. That index expected to have remained unchanged or unrevised at 73.2. Also, existing home sales data due from the United States this afternoon as well. In terms of speakers, we are due to hear from the ECB's Cipollone and also ECB President Lagarde, who will be speaking in Davos this morning. And last but by no means least, today before the open, we have earnings due from Verizon and American Express. Just very quickly, it's worth bringing your attention towards next week, which is going to be a very, very busy week in terms of scheduled events, at least policy decisions coming up from the Fed, the ECB, and the Bank of Canada. We also have big tech earnings getting underway next week as well. Meta, Microsoft, Tesla, Apple, all reporting next Wednesday or Thursday. So next week could be a little bit spicy. And of course, we've got Trump in the mix as well. And as a result of that, you may well see that conviction is perhaps a little bit lacking as we move towards the weekend, given that plethora of event risk that we have up on the horizon. And that is pretty much a lot from me this morning and for this week.
Perfect. Thank you very much, Mr. Michael Brown. Thank you for the week. Listeners, thank you for tuning in as always. As usual, if you can't be good, be careful. If you can't be careful, buy a pram. We will be
and don't get blown away.
Well, it's going to be a very blustery day or weekend for those of us in the UK. So yeah, I will be staying firmly indoors with lead tied around my ankles. Not just for the kinky reasons either. Oh, Ryan, I got so far in a week. Oh, right. On that note, we'll see you Monday. Ciao for now.
Goodbye.
See you later.